Hello. Testing 1 2 3. 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 Audio test 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 1 2 3. everybody. We're going to get started here soon. We are trying to test the audio, having a little bit of trouble. So if one of you that's already logged on can chat us and let us know that everything is working, or send us through the question section, that would be awesome. Otherwise, we'll get started here in a minute. Hello, everybody. Welcome to Verily's monthly webinar. Last week, we talked about industrial hemp in general and how to initiate a hemp program at your institution. This month, we are going to focus mainly on CBD products and other consumables and what the laws are around that and how you can effectively mitigate the risk of banking those customers. So with that, we will go ahead and get started. There should be a box at the bottom that you can submit questions if you like. We'll also run a poll at the end. If you could stay to the end and answer that, we would be very grateful. I think that's the only housekeeping. After this webinar, you will likely get an invitation to our April webinar. Okay. So banking hemp-derived CBD and other consumable hemp products. First, like we always do, we're just going to kind of set the vocabulary so we all know what we're talking about and we're all on the same page. A lot of people use these terms differently, and that is A-okay. I always say that just choose the terms that you're going to use in your institution, define them in policy, and use them consistently across your institution. And if you do that, you can call it whatever you want. So what is cannabis? Cannabis is the overarching term for the plant that can grow as either a marijuana plant or a hemp plant. So it is the all-encompassing term of everything in the cannabis industry, including hemp, CBD, and marijuana. Marijuana is a hemp plant that grows with THC over 0.3% concentration. Marijuana is federally illegal. However, it is being legalized at the state level for both recreational and medicinal use. And more states are picking up laws there. Even conservative states are introducing compassionate use type programs where certain illnesses, specifically epilepsy, can have access to low THC products that are still technically categorized as marijuana to help them with their illnesses. So hemp is a cannabis plant that grows with THC at or below 0.3%. Industrial hemp was legalized as part of the 2018 Farm Bill at the federal level. Before that, there was the 2014 Farm Bill that took the first step in separating hemp from marijuana. In a federal definition, it was separated. However, in the 2014 Farm Bill, the definition of hemp did not include derivatives and extracts from the plant, so it didn't include CBD. But with the 2018 Farm Bill, it did. It included seeds, extracts, cannabinoids, everything that comes out of an industrial hemp plant was deemed federally legal, which encompassed CBD. And there began a craze in our nation where CBD just filled the shelves everywhere you looked. You could find it, you could buy it. And a lot of banks are struggling with, how do we handle this? You know, our local grocery store is shelving it, our local gas station, local drugstore. These are good guys. These are people we've been doing business with for 10, 20 years, but now they're shelving CBD. How do we handle that? Or we have a large business that wants to come into our institution, and they are an industrial processing facility for CBD. It seems like they're doing everything on the up and up, but how do we handle them? So we'll go through a lot of that today. But in that 2018 Farm Bill, that is what federally legalized hemp and its derivatives, including CBD. Another piece of the 2018 Farm Bill was hemp production. So that is governed by the USDA and state agricultural departments. We went really deep into this last month, and you can get a copy of that webinar if you have not heard it, so we won't go too far into it. I believe there have been some changes since last month, so we'll lightly touch on that. The USDA has approved Pennsylvania's plan as well as Georgia's. I don't remember if last month Wyoming and Washington were already approved, but they are now. So this nifty map we try to keep updated. It literally changes every single day. We log into the USDA and there's a change, but we do our best to keep up with it because we know it's really important for banks to understand the laws in which in the areas that they're serving these hemp, marijuana, and CBD businesses in order to design the due diligence and properly mitigate the risk. So this is where we are on the state of the USDA approved plans. I do want to clarify that USDA plans do not govern CBD processing, manufacturing, or sale. However, it is common that when states were drafting their plan for USDA approval of production, meaning cultivation, that they went ahead and wrote out those laws for how they're going to govern processing, manufacturing, retail sale, handling, all that stuff in between. So you can likely access your state government websites and find out what those rules are, at least in their draft form. And we'll go through some states today. But just so that everyone's clear, the USDA plans do not have anything to do with CBD. They're strictly agricultural in nature. So what is CBD? This is what we're here to talk about today, right? So CBD is short for cannabinoid, which is a cannabinoid found in the cannabis plant. There are over 100 different cannabinoids found in cannabis plants. CBD is one of them. THC is also a very common one that you hear about. There are several that we'll talk through today other than CBD, but CBD kind of has the biggest claim to fame, and we hear about it most often, and there's the most questions out of financial institutions. So it's been a long time since I've taken a chemistry class, but this gives you a visual of the difference between CBD and THC, the chemicals that you can extract from a cannabis plant. They are pretty similar when you look at that diagram, but they're very different. CBD is not seen to be intoxicating or have a psychoactive effect like THC. So in its bred, a lot of hemp plants are bred to have higher levels of CBD and lower levels of THC. So these plants can be engineered to produce the optimal level of what the cultivator or what the farmer is trying to produce to sell to their processor or whoever is next in line in the supply chain to buy their product. So like I mentioned earlier, that 2018 Farm Bill specifically included cannabinoids in its definition of hemp and thus federally legalizing any cannabinoids that come out of a legal hemp plant. So technically there can be CBD products on the shelves that are not from a hemp plant. They can be from a marijuana plant, which is legal in states where recreational or medicinal marijuana is legal. But in states like the state I live in, Texas, only CBD products with THC under that 0.3% threshold are legal for purchase. So it depends on the state you're in. What we're talking about mostly today is hemp-derived CBD, but we will kind of talk through some differences as it makes sense throughout the presentation. So like I mentioned before, there are several different types. It's not just CBD and THC. They each have their own claim to fame. CBC is getting really popular, CBG, CBN. A lot of products also will be labeled with full spectrum, meaning that it maintains all the cannabinoids that were in that extract and does not isolate one over the other. And it's perceived that some of these work better together, and it's called the entourage effect. So sometimes you'll see a CBD isolate being sold or manufactured or processed, and that's just CBD. But other times you'll see them mixed together, or you'll see a full spectrum product that uses all the cannabinoids together to reach the optimal potency or effect, whether that's lessening anxiety or stress. There's a lot of different ways that these products are marketed. So where are we today when it comes to CBD? So it's legal if it is extracted from a compliant hemp plant per the 2018 Farm Bill. However, the Farm Bill preserved the FDA's authority over hemp products, including those that fall under the categories of food, dietary supplements, human, and pet drugs, and cosmetics. So that's where a lot of this uncertainty in the industry is coming from, because the FDA has been very strong in its stance that CBD cannot be marketed as a dietary supplement or a food additive in interstate commerce that is illegal per the FDA. And the reason for that is CBD is included in an FDA-approved drug for epilepsy. That drug is called Epilex. And the FDA had pre-existing regulations that if an ingredient is part of an approved drug and it wasn't previously studied, then it cannot be marketed as a dietary supplement or a food additive. There's a lot of lobbying going on. A lot of people in the industry want CBD to fit under one of the exceptions to that rule because it's so popular, because the market's so hot right now. But the FDA has been pretty unwavering on their stance. They are looking into whether or not they can change their stance, looking into whether or not CBD might fit under an exception. But right now their stance is it does not fit under an exception. We've also heard quite a bit out of the FTC around how a lot of these products are marketed and presented to consumers. The FTC and the FDA have both issued their fair share of warnings to some of these companies that are marketing their products kind of in a haphazard or aggressive way, where they're saying, hey, this cures Alzheimer's, this cures MS, this cures heart disease. And the FDA and the FTC, they're not having it. They're sending out letters, cease and desist. You can't advertise like this. And they're paying a lot of attention to it in the industry for sure. This is the kind of thing, and we'll get to this in a little bit, that negative news will pick up, right? We are not, as bankers, we are not experts at laws around health and human service marketing and labeling. They are, though, right? So you don't necessarily need to police your customer and be an expert in what they can or cannot market, but you do need to make sure that they're not on one of these FTC warnings or FDA warnings. And you pay attention to those warnings, and if you see activity that mirrors what these companies are doing that are getting in trouble, then you can probably make the determination that this company that might be your prospect at your institution is not marketing in a prudent way. However, we are not experts in that, so it's kind of a fine line of knowing what's right, what's wrong for them to do, and trying to pretend like we're the FTC or the FDA. So definitely prudent risk management to look at their marketing materials and to look at their websites. But it's going to be really hard for a banker to ascertain that what they're doing is legal. So you just have to watch on the outskirts with things like negative news, and looking for material changes in their behaviors and things like that. So with that being said, with the FDA's harsh stance on CBD, the FTC taking action about some of these marketing claims, there are consumable hemp products that have been deemed GRAS, or generally recognized as safe, by the FDA to date. There's 3 of them. They're the 3 that you see on your screen right there. None of these products contain CBD. Hemp oil is different than CBD oil. So there are 3 things that the FDA is saying are safe that are extracted from hemp that are consumable. So if you have a prospect at your institution that is processing and distributing whole hemp seeds, it's not the same game, even though they're both consumable products, as somebody that's manufacturing or selling a consumable CBD-infused gummy, for example. So just make sure you're able to make that distinction and separate their risk profiles from each other. That's not to say that the CBD manufacturer is high risk, but it's pretty safe to assume that a whole hemp seed manufacturer is lower relative to that CBD manufacturer. So issues in the industry, we've been seeing a lot of confusion around CBD in general. A lot of retailers are having trouble accessing payment processing services, which is essential if you're a retailer or you operate an e-commerce business. You have to have a way to accept payment, and to get that payment moved to your bank account. There's been a lot of issues with payment processors, merchant processors, taking on CBD businesses, and maybe it's because they had a don't ask, don't tell, and they weren't doing the proper due diligence, but then they later just completely exited the industry and dropped hundreds of CBD clients, leaving them without a way to process payments in their establishments. So there's a lot of that going on. I think there's also a lot of confusion on the CBD and hemp side, where they think that community banks are merchant processing operations as well. That you can go open a checking account at a community bank and get access to merchant services, which isn't typically the case. So there's a lot of confusion there. Community banks really trying to figure out how to help these people and how to get them the services they want, and working with them, but there is a lack of access to payment processing for CBD businesses. Another big issue that the industry is facing is labeling. I was at a conference in December in Las Vegas, and there was a legal panel, and the topic wasn't around labeling and packaging, but it kind of took over the whole dialogue of the panel because the industry is having such a hard time with that. Like we were just talking about with the FDA and the FTC, there's also labeling and packaging requirements out of each state, and sometimes local law also applies. So they're spending all this money on bottling and labeling, and then a law changes and they have to regenerate and repay for all their labels to be redone, which is a huge expense, and it's really hitting their bottom line. Not to mention just the legal and consulting fees that come along with getting all that right. It's the name of the game, and it's an industry that they got into, but because of how dynamic the legal landscape is and how quickly things are changing, it becomes a huge expense for these businesses to keep up. There's also a good amount of supply and demand mismatch. There's a lot of businesses on the East Coast that have put a lot of money into this industry, and they're sitting on biomass or materials that they would sell to a manufacturer to make a good product because they're not getting the right return. Like they plan for a certain return for their business to make ends meet, basically, and now the demand isn't out there to where they're not getting the right price for their business to maintain a viable status. So that's another big issue. And a lot of it is just the infancy of industrial hemp and CBD, and just the industry maturing and the economics kind of stabilizing around it. So it'll be interesting to watch, but it's definitely something that a bank needs to pay attention to if you're considering extending credit, and also just to be able to know that this is going to be a business with longevity as a customer for you. So regulatory oversight. We talk a lot about the USDA, but the USDA doesn't govern this. This is not part of the plans that they are approving for states, like I mentioned at the very beginning. So how do you know what the legal and regulatory requirements are for these businesses so that you can make sure that they have the right license, or that they've registered properly, or that they're doing what they need to do based on their geographic area to maintain a status as a legal business? So first, let's just highlight the different players in the industry. I showed this slide last month, I believe. Many of you have probably already seen it. So the first two columns, the producer and the handler, those are most likely governed by the USDA plan and the state agricultural plan. Some of those state agricultural plans do reach into processing, where they do govern that processing license. So there's kind of like a dotted line there. Other states lump processing and manufacturing kind of together, just everything that happens between the raw material and the product that's ready to go to the shelf is under one license. And that typically would be overseen by like a Department of Health and Human Services, or something that would be the state equivalent of an FDA. And then lastly, there's retailing, or just wholesale distributing. Some states do have some kind of license or registration for those individuals, and some don't. But again, that's not part of the Texas Department of Agriculture. Most likely fits into that public safety department in your state. So you have to know enough about your prospect or your current customer to know which bucket they fit into, who is the regulatory authority that oversees them, and what their licensing or registration requirements are. And it's a little hard to get to the bottom of that, to say the very, very least. Here at Verily, we help our customers, our financial institution customers, make heads or tails of what the legal requirements are in their area. There are some states that allow local laws around this. So in Texas, they do not, but in states like California and Colorado, you might need a state license and a city license, or you need a state license and then you need to register in the city you do business. So there's local authorities as well, and it gets very, very complicated to be able to clearly understand what this business in front of you trying to get a deposit account or a loan at your institution needs to do to maintain their status as legal, not get in trouble, and be a long-term customer of your institution. So a lot of due diligence required there. But in all the guidances that we have around hemp right now that's out there, they're pretty heavy on the fact that you need to understand the laws and the regulations in the areas where you are serving customers in order to properly mitigate the risk. So it's very important that you kind of dig down into the bottom of this and figure out what they need to do on an ongoing basis to be a legal business. So we're going to take a couple of states as examples and kind of talk through what these states require out of CBD businesses to give you a good sample set, and also to illustrate the diversity. There's not really two states that are doing it alike, which makes it very hard to have a wide geographic reach when it comes to serving these businesses. I think a lot of that will stabilize. I think a lot of it is the infancy of the industry. But right now, you have to have a good legal team or a good services support organization that'll help you kind of stay on top of this. I find that the industrial hemp-derived CBD laws in states where marijuana is recreational legal are the least advanced. It's kind of an afterthought for them. They're making money on true marijuana, and I'm talking about states like California, Colorado, Washington. So they're not real motivated to have this strict regulatory authority over hemp. states like Texas that did not have any marijuana income were more motivated to get the regulatory and licensing structure together for hemp and CBD to get that tax revenue. So it's interesting to see how the different states are handling it, and we'll go through a couple of those. So we'll start on the west and we'll work to the east. So for California, obviously marijuana is recreationally legal. So CBD is legal there regardless of the THC level. So if you go into a dispensary in California, you can buy CBD with high levels of THC legally, even though that's federally illegal. California, currently, they don't have any laws around manufacturing, processing, or selling non-food hemp products. So there are no licensing for manufacturing, processing, or selling hemp. There is a bill out there with some proposals to establish a regulatory framework, but it hasn't been passed yet. And that framework would be specific to the FDA-covered products like foods, beverages, and cosmetics. Ultimately, CBD that is derived from hemp in the state of California is overseen by the Department of Public Health in their Food and Drug branch. And in light of the FDA stance in California, it is illegal for hemp-derived CBD to be used as food ingredient, food additive, or dietary supplement. Only hemp-derived CBD, though. So if it's marijuana-derived CBD, because that's not the ingredient in the FDA's Epilex drug, it is not illegal. So there's a dotted line there, which can make it hard for you guys to kind of figure out which side of the fence it's on. In the state of Texas, so Texas had a compassionate use program that is governed by the Department of Public Safety, and certain physicians can prescribe THC or CBD with THC less than 0.5% for certain ailments. Other than that, marijuana is not legal, and even that is very low THC, quote unquote, marijuana. But now after the Farm Bill, you can buy CBD legally in Texas if THC is below the threshold. That is overseen by the Department of Health and Human Services. So the Department of Health and Human Services in Texas is creating licensing for manufacturing CBD, and then they're creating a registration program for retailers that are going to sell CBD to consumers. So you would just have to register annually, and that's basically like raising your hand and saying, yes, I have CBD in my inventory, and then that puts you in the list of people that they can come inspect. They can sample the products that you have on your shelves and make sure that they're legal, but it's not as stringent as a license would be. And then the testing, like the actual testing, would be done by the DPS, not the DSHS. So a lot of different regulatory authorities involved in Texas. I think they probably had the most in these states we'll look at. Illinois is interesting. It's recreationally legal. Marijuana is in Illinois, but that's a new thing this year. So it wasn't in effect a long time before the Farm Bill. So not as drastic as California, hemp doesn't feel like as much of an afterthought as it does in California. In Illinois, hemp processors have to register with the Department of Ag. So it's one of those states where a processor is kind of lumped in with the agricultural side of it. Also in city and state business licenses, like general business licenses, there's a question that asks if you are involved in CBD or if you sell CBD. So they're trying to gather that information, but they have not instituted an official CBD licensing or registration program. They're just kind of surveying normal business license applicants to see if they're involved and going from there. In Virginia, industrial hemp processors have to register. And then if they're going to manufacture anything that's consumable or for human consumption, they have to apply as a manufacturer of hemp-derived extract intended for human consumption. That's the name of the thing that they have to apply for. So again, it's manufacturer of hemp-derived extract intended for human consumption. So they have some licensing and registration there. It's almost easier when you're in a state that has that, because it's so much easier to check the box and say, okay, processor coming to my financial institution, wanting an account. Let me just see your license. Let me validate that it is real and active and that you don't have any enforcements. And that's so much easier when there's a gray area like CBD brings to the table for BSA AML than some of these states that don't have that structure around it. Virginia also has a dealer registration, but it's not for retailers. So that's more for brokers. So there's a pretty well-developed licensing and registration structure in Virginia. North Carolina doesn't have a whole lot in the way of overseeing CBD or manufacturing or processing yet. Their stance as a state on CBD mirrors the FDA. So most things you read out of the government in North Carolina mirror what you hear from the FDA, and just ask consumers to be prudent and careful about what they purchase. But there's not a whole lot of laws and regulations. So as of today, processors have to register at the end of the year, and they just have to report the total weight and type of hemp that they processed. And they submit that to the Industrial Hemp Commission. However, the Industrial Hemp Commission in North Carolina, they don't have the authority to license or really monitor or enforce anything on these processors. They basically have that list, and then they publish it as a service to the industrial hemp participants that are part of their program. So it's basically just a list they publish, but there's not a whole lot of oversight structure there yet. We can probably expect that to change. So a diverse offering of laws and registrations and licensing across the country, which makes it very complex. And then you can really understand why the examiners and the regulators put so much emphasis on understanding the dynamic legal landscape. Because if you don't understand the laws in the areas that you're serving, you cannot appropriately conduct due diligence and make sure that this is a legal business and that legal funds and not illicit funds are going through your organizations. So again, that's mostly hemp-derived CBD, what I was speaking about on the last slide, other than states like California. But marijuana-derived CBD, if you're a bank that is open to banking marijuana, it is more widespread and a little more clear-cut, because they would just need like a normal dispensary license or a marijuana processing or manufacturing license. And those structures and processes are more mature and more well-developed in states like California, Washington, Oregon, because it's been around for a while. Whereas industrial hemp, we've only been federally legal since 2018, and states are really just now getting their processes and plans in place. So it's a little harder to ascertain where that's going. So if you're in a marijuana state, or you're open to serving marijuana states or businesses, CBD fits into your classifications or your tiers, however you call it. There are pieces of the CBD industry that would absolutely be called seed to sale. Anybody touching the plant, its derivatives, or the products that it makes is seed to sale. So your processors, your manufacturers, your dispensaries, your retailers, those are tier 1 or class A, or however you call it. Those are seed to sale marijuana businesses. And then there's ancillary businesses like your labeling, your packaging, your attorney that helps you with those labels, things like that. So just making sure that when you write up your policy and you split up your different businesses, you make your classifications, you design your tiers, however you do it, that you consider the differences in CBD and where it fits in, whether it's hemp-derived or marijuana-derived, and that you do make those separations, because they are very different when it comes to how a financial institution deals with them. So do we have relevant guidance? With CBD, it's hard to say. There's not a whole lot of guidances that really expressly cover CBD. It's interesting because we have the interagency guidance on hemp that came out in December. It was much anticipated. The industry was waiting for it, and it came, and it was very agricultural in nature. It mostly covers what the USDA governs. Does not really mention CBD at all, except for in that very last paragraph. It says that CBD is still governed by the FDA. And if you have questions about the legality of CBD, call the FDA, basically. It didn't give too much around it. The NCUA guidance and the Illinois guidance did give a little bit more. And then, of course, you have your MRB guidance for those CBD businesses that are derived from marijuana. They would just fall under that FinCEN guidance. But really, in a gray situation like this, you have to look at those guidances that are more focused on risk-based banking, risk-based controls, and de-risking, right? It's up to a bank to pick their customers. It's up to a bank or credit union to assess the risk of each individual customer and to make that choice. It's not up to the regulators. So just making sure that if you're willing to take on this business, there's nothing wrong with that, as long as your policies, procedures, processes, and controls match what you have assessed as part of your risk assessment before you even start that process. So just understanding what the best practices are out in the industry, even though we don't have a lot of regulatory guidance, there are no enforcement actions to reference, but just understanding the risk, understanding the industry, understanding these people that are coming to your door to do business with you so that you can properly monitor them, properly conduct due diligence, and be able to identify suspicious activity should it occur. In order to do that, you have to create that baseline. So I would say you apply your normal BSA guidances, your normal BSA risk management, since there is lacking guidance specific to CBD. I don't think we'll ever really get a CBD guidance. I think that it either applies to your marijuana-specific guidances or it applies to your hemp-specific guidances. And you kind of have to do it yourself, design your own, consult advisory services that can help you do it until we hear a little bit more from the regulatory agencies. So some best practices, if you are considering banking CBD businesses, the first thing you have to do is conduct a risk assessment, right? That is Risk Management 101. You always start there. You look into the legal landscape of your geographic area or the assessment area which you serve customers and figure out what the legal landscape is for CBD. You assess the risk of how it's going to affect your different lines of businesses and your different risk pillars. How is it going to affect your liquidity position? How is it going to affect your BSA department and your BSA risk? Is it going to put a strain on your resources? How are you going to mitigate that? And then from there, you design your plan, you design your policies, procedures, processes. You definitely need to take it to the board, discuss it with the board, talk about how that might affect your strategic planning, your capital planning, and get the board's buy-in. I would absolutely recommend that board approval package being accompanied by training material so that the board knows what they're even looking at. A lot of BSA professionals, myself included, we kind of live and breathe this these days. A lot of training materials you see, a lot of webinars you attend are covering cannabis, CBD, hemp. You can't expect that your board has had that much exposure to this new piece of compliance. So I would train them, and then you present them your findings in the risk assessment and how you design your program, and then they'll have better eyes to kind of look at that and decide whether or not that's sufficient to mitigate the risk. I would consult your exam team and your regulatory agency and just discuss it with them. I've yet to really hear a lot of pushback in these types of conversations from financial institutions. The regulators are being pretty tight-lipped. I don't think they've really come around to deciding how exactly they're going to handle this as whole agencies. They're just kind of taking it institution by institution and figuring out what their best practice recommendations are going to be. But as long as you are applying prudent risk management, prudent controls, you're probably not going to get criticized too much. Make sure that one or several key people in your organization really understand the laws around CBD and really have a good baseline understanding of the industry and the different businesses that fit within the industry. A good best practice there is to assign one person as kind of your cannabis point person that is going to be reading all the articles and attending all the webinars and going to all the conferences and really learning it. And then there's an organized, structured way that information is disseminated throughout the organization to other individuals who aren't reading these articles and attending those trainings. So typically, like one person or maybe a committee of people are in charge of really understanding the legal landscape and staying up to date with it. And then that information is socialized throughout the organization. You, of course, want to add it to any trainings, not just BSA trainings, all applicable trainings. You want to make sure that you design a system of controls that can mitigate the risk. You want to be able to clearly define who these businesses are, what the risks are, how you're going to risk score them in your automated BSA AML systems, whether or not you're going to look at them with tighter or more conservative parameters in your transaction monitoring. You want to design a monitoring and a reporting program that goes along with creating limits and risk thresholds. So if your board says, yes, let's bank cannabis, we can take on accounts for hemp, CBD, and marijuana. We're open to all of it. But in the first 6 months, we're only going to take 30 accounts. We're going to cap it out at 10 million in deposits, and then we'll kind of reassess. So it has to be somebody's job to monitor against those thresholds or limits, right? Whose job is it to monitor and then report, okay, we said 35, we're at 32. Is it time for us to regroup? We have 4 in the hopper. Are we going to be able to approve them? We don't want to breach our threshold. So always monitoring your risk level against what the board appetite is and what those limits are and reporting on it. Examiners love to see that kind of stuff in board and committee minutes, and they want to see that you have a really good pulse on the amount of risk you have in your bank related to cannabis right now. You want to expand your audit scopes when necessary. You also want to take a look at any third-party agreements you have in place and make sure there isn't any fine print that prevents you from serving cannabis businesses. Sometimes there is. Sometimes it's just because it's a dated contract and you go to that third party and you say, hey, we're thinking about doing this. And they say, oh, okay, we'll change that. Other times they're a little more adamant, but you do need to look at all your third party agreements and make sure that there isn't anything in there that prevents you from going into the cannabis industry. So once you design all those controls, you design the policy, procedure, and process, you're going to monitor its effectiveness and test the controls, right? So we wrote out these procedures for onboarding so that we only bring on the best of the best. And then in 3 months, I'm going to sample all of the cannabis businesses we brought in and make sure that we complied with our internal process, we complied with our internal policy, and that we're not going to have any surprises come audit or exam time. So you're always monitoring and testing those controls. So that's just really general best practices. From a BSA specific perspective, onboarding CBD is pretty similar to onboarding hemp if it's hemp-derived. There's compliance standards. There's licensing and registration requirements potentially. So once you identify what licensing or registration requirements that your prospect is subject to, you obtain the documents that prove that they have that license or that they have registered. You also use some kind of third-party system like Verily to verify that that license is valid and in good standing, and that there's nothing out there from the state or other licensing authority that indicates otherwise. You also need to make sure that you have a really great baseline understanding of what the business does, who they do business with, what are their marketing practices, what are they making, who is their target audience, and you kind of write it up like a loan memo, right? Like, this business is involved in the manufacturing of consumable CBD products. They source their CBD from a local farmer that they've been doing business with for a long time. They get the testing documentation prior to the final sell. They do their own testing throughout the life of the product manufacturing cycle. You document that with proof that they've done their testing. Maybe even you obtain policies from them around their own internal quality control processes. Document any disposal events that they've had because they were using hemp that was non-compliant. Very similar to a normal hemp agricultural operation for onboarding CBD as far as due diligence. Very similar. On the other side, if it's marijuana-derived CBD, same thing. It's just like it's any other seed to sale marijuana business, the due diligence you would do on them. There might be some little differences for CBD, but in general, it's very similar. Negative news is important for CBD for those FDA and FTC warnings or any equivalent warnings at the state level or the city level. Again, we are not, as bankers, experts in how food and additives of food can be marketed, right? Those claims on the label, what the label has to say, what that QR code needs to say. So negative news is a really good way to dig into whether they've been in trouble before or whether their practices mirror that of somebody else that's been in trouble recently. You also want to make sure that you're doing that initial site inspection. It depends on the risk profile of the business on whether they warrant an ongoing, but you for sure want to do the initial site inspection for any cannabis-related business in today's regulatory environment where we're unsure in what the examiners want to see. So ongoing best practices for CBD, again, this does not assume that they're high risk. This is ongoing activities regardless of the risk score. So you're monitoring their license and registration status. If it's a registration that they have to do every year, then you have a tickler system in place to make sure that you obtain annually proof that they are keeping up with that and that they maintain their status as a legally registered CBD retailer or a legally licensed CBD processor. You scan negative news to see if there were any events. You scan the licensing authority site or use a third party like Verily to do that to try to alert you of things like enforcement actions or violations. You also want to have, and I should have mentioned this the last slide, you want to have some sort of special account agreement for these types of businesses that put the onus on them to keep you updated in a timely manner should there be negative licensing events, should they have a testing situation where they had to dispose of some of their processed materials, anything material that would affect the business, they should be required to notify you proactively in that account agreement. And then you have all the monitoring activities as kind of a safety net in case they're not on the up and up and they're not going to let you know so that you can figure that out yourself. Website reviews, looking at marketing materials to make sure that they haven't pivoted since you did your onboarding due diligence. Maybe they knew that you were going to look at the marketing materials, so they made some changes. And since then, they have gone back to their ways of, marketing something that cures Alzheimer's or cures MS, because we know that the FDA and the FTC are not hot on those ideas. So that's probably not somebody you want to be doing business with. But it would have to be very blatant, I think, in those marketing reviews to see that. But it's still prudent risk management to document that you're doing marketing material reviews and that you're doing website reviews on an ongoing basis. Other than that, it's really normal ongoing monitoring that you would be doing for any business. I will say, like from a transaction perspective, you're going to be seeing those merchant services settlements in ACH. So that's something that you'll want to monitor for odd behavior, activity that is significantly higher than other comparable businesses that you're serving in similar geographic regions, or just a lot of volatility in that ACH settlement. Because of where we are with merchant processing with CBD, it might be a merchant processor that you don't recognize. I don't think that you need to do full-blown due diligence on that processor, but when you see that ACH settlement come in and it's a company that you don't recognize, I would at least document a cursory review. And you guys know how to do that, right? The alert pops, and part of your review, you say, we did a cursory review on the business that they're using for merchant processing. We looked at their website. It looks like they're legit. And now we're just monitoring their transactional activity for deviations that indicate potentially suspicious activity. So I don't think you need to go super deep on them, but I would definitely do just a quick review because there are some bad players in that industry right now. Granted, they're not your direct customer, but it's prudent to just do a quick review on them. So for SARs, if it's not marijuana, you don't have to file a SAR. If it is truly hemp-derived, then there is no marijuana SAR. Now, some of these businesses might be involved in both, so you'll have to make a risk-based decision based on that FinCEN MRB guidance, because guess what? It's kind of gray on those that serve both, just like all the guidances out there, but you need to make a decision in policy, clearly state the customers that you're willing to serve, and clearly state whether each bucket of those customers are going to get an MRB SAR in your organization. And then just stick with whatever policy that decision is, or whatever that policy decision is, and be consistent. And then the worst that's going to happen is an examiner disagrees with you and they ask you to change your policy. It won't be just a straight violation in today's regulatory arena. I think because of so much uncertainty. So if this relationship does present an elevated risk profile, so maybe a lot of institutions are risk rating cannabis businesses as moderate or high out the gate, and then doing a 30, 60, 90-day review, whatever they do at their institution, and then really assessing risk with a good amount of transactional history and relationship history, and then typically bringing them down to a moderate or low, especially if it's hemp. But if a CBD business is high risk and stays high risk, then you're doing those quarterly or semi-annual reviews, whatever your policy requires. And you're digging really deep into these businesses, basically as deep as you did at onboarding at a policy prescribed cadence. If you feel like something is suspicious, you are filing a SAR regardless of whether it's marijuana. So even if it's a hemp business, you're filing a SAR. A marijuana business, you might be filing a priority. Or maybe you just have them on high risk as an abundance of caution. You're going to document that review every quarter, and you're not going to bring them down. Some banks are taking that really conservative approach. But at the end of the review, you have a decision to make, right? Does this risk still fit in our board prescribed risk appetite? Is the risk score that we have on this customer still appropriate? Does it need to go up? Does it need to go down? Do we need to exit the relationship? Or are we just doing the work, documenting that we're keeping up with them, and we're just going to keep them where they are? None of those answers are necessarily wrong, but it needs to be well documented on how you arrived at that conclusion. I always say that EDD or high risk reviews, moderate risk reviews, it shouldn't just be like, every 4 months I do the same thing. I check the same 7 boxes. I answer the same 7 questions and I go on my merry way. If it's always the same, then maybe it's not a high risk customer. You should be making an educated decision at the end of every single one of those as to what the risk profile of the customer is. You're reassessing it, identifying that this customer matches your risk, maybe even identifying that a SAR is appropriate, but there's a decision to be made at the end of a high-risk review. So a few things before we wrap up. I don't think we have any questions, but I'll double check at the end. Some lending considerations. I think they're pretty similar to that of a hemp business or a marijuana business from a lending perspective. You want to make sure that the business is going to be around for a while. You want to make sure that they have longevity, that they have good management, and they're not just jumping on the CBD bandwagon because it's the new gold rush, but they actually know what they're doing. They have good equipment. They have good processes. They have good due diligence exercises in identifying their materials used and to who they sell their materials to, and that they're marketing correctly and that their website properly displays what they do and who they are, then they're probably at low risk for getting in trouble, right? But right now there's so much uncertainty. If you lend to these businesses, I believe it to be prudent if you have some kind of clause in there that you can call the loan due if they lose their license or if they lose their ability to do business. I would not be taking materials as collateral, very similar to agricultural hemp business. If their product is not compliant and THC is over the level, then they can't sell it in states like Texas. And it's not as marketable to a true marijuana state either because THC is too low for that. So what happens if that is the output of their processing or their manufacturing? So I wouldn't be taking the product as collateral, maybe machinery, real estate, personal guarantees, but not collateral on the product or the output. Also, you as a financial institution are likely, depending on your state, to not have the proper license. You would need to liquidate that anyway. So things to think about. There are, I think, some USDA programs and some SBA programs out there for these businesses. A lot of them are creditworthy. And if they're creditworthy and it's prudent risk management and safe and sound banking, then you can extend credit to them. There's nothing that says that you cannot, but you need to make sure that you have the right terms in the loan, the right conditions to protect you should something happen to their license or registration or whatever they need to do business in their state. Also, along that same vein with lending, it's pretty hard for these businesses to obtain private insurance right now. There is a greater need for CBD than like a agricultural hemp operation to have some sort of liability insurance. And it's just really hard to come by. Insurance, a lot like banking, is trying to get their arms around the risk profiles of these customers and really try to design the right way to underwrite the risk so they can price it and write the terms of the insurance policy correctly. And that doesn't happen overnight. So that industry is evolving to the cannabis industry, much like banking. And right now, these businesses don't have a lot of protection. Insurance policies also can protect banks that extend credit. So it's important to understand that they might not be able to get insurance on their operations. And if they do, it might have pretty unfavorable terms or be significantly more expensive than a business similar to theirs not operating in cannabis. So something to think about there as well. And I think that is it. Let me check to see if we have any questions. You guys, we're running out of time and we don't have any questions, but if there's anything that was unclear or that I didn't cover completely or that you're just curious about, please feel free to submit a question. You can email me directly at jessica@veraleaf.io. You can put a question in the question box and I'll reply to you personally after the webinar. If we get any questions that I think will be good for all the attendees, we'll email that out to the whole group afterwards. We will be having an April webinar. We'll be hearing about that shortly, about what the topic is. If you have requests on the topic, please let us know. This is for you guys. We want to help financial institutions really wrap their heads around this, their arms around this, and get to a place where they can serve these businesses, because it's a very underserved industry right now, and a lot of them are good small businesses that just need a place to bank. So whatever we can do to help you guys get those policies, procedures, processes in place so that you can serve them, we would love to help. Do not hesitate to reach out to myself or to jake@veraleaf.io. With that, I hope everybody has a great Tuesday, and we will see you next month. Thank you.